This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news China has not announced the new stimulus that investors were expecting, rather just rehashing existing measures. Equity and commodity markets reacted negatively to the disappointment. But first, the American Retail Redbook Index rose marginally last week to be 5.4% above year-ago levels and well ahead of inflation. And the US SME Optimism Index rose slightly in September, even though uncertainty levels remained high as the US election gets closer, less than a month away now. Meanwhile, the Real Clear Markets Optimism Index for investors rose to a 19-month high, but again the change was small. And the US trade deficit in both goods and services fell in August from July in a better-than-expected result, driven by stronger exports that were 5.2% higher than a year ago. And there was yet another very well-supported US Treasury bond auction overnight, this one for their 3-year note. It resulted in a 3.82% median yield, but up sharply from the 3.40 median yield at the prior equivalent event a month ago. And Canada also posted its August trade result, and its deficit came in a bit more than expected, mainly on a 1% fall in exports. In China, the widely anticipated National Development and Reform Commission briefing was a damp squib, essentially not announcing anything new in the way of economic support for their economy. All they did was front-load existing measures. A rally in Chinese stocks on their return from a week-long holiday fizzled, as traders questioned Beijing's resolve to add more effective stimulus. After rising strongly in anticipation over the past week or so, the iron ore price sank sharply after this briefing. And China said it'll impose tariffs on European brandy in retaliation for EU tariffs on EVs. German industrial production rose in August from July, and by more than expected to be only 2.7% lower than a year ago, the least year-on-year decline in a year, and a big improvement from July. In Australia, business sentiment came in less negative in September. The NAB Business Confidence Index rose to -2 from August's revised -5, amid notable improvements in retail and recreation and personal services. And the consumer mood is improving too. Australia's Westpac Melbourne Institute Consumer Sentiment Survey jumped to a 2.5-year high in October, a sharp turnaround from the fall in September. This followed interest rate cuts in other countries and more signs that inflation is easing locally. And we should also note that the overnight Pulse dairy auction for just whole milk powder and skim milk powder came in less robust than the minor gains expected. The dips were small and most for skim milk powder, but essentially both products are retaining their recent higher levels, even if they are slipping slightly. On the weather front, Hurricane Milton isn't easing, still a Category 5 event and heading straight for Tampa, Florida. Urgent evacuation orders are in place. Expected landfall is about in 24 hours. Even if it does ease somewhat, it'll still be a powerful event. The US Treasury 10-year yield is now just on 4.03% and up 1 basis point from yesterday. And the price of gold will start today at $2,611 an ounce and down $33 from this time yesterday. Oil prices are sharply lower too, down $4 at just on $73 a barrel in the US, while the international Brent price is now just on $76.50 a barrel. And the Kiwi dollar starts today at 61.2 US cents and unchanged from this time yesterday. Against the Aussie, though, we're up 20 basis points at 90.8 Australian cents. Against the euro, we're still at 55.8 euro cents. That all means our trade weight index starts today still just on 69.4 and up a minor 10 basis points from yesterday at this time. And the Bitcoin price starts today at $62,417 and down 1.9% from yesterday. Volatility over the past 24 hours has remained modest at just on plus or minus 1.6%. Join us at 2 o'clock this afternoon when we'll have full coverage of today's monetary policy review and the expected cut to the OCR. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.